banker, specific, specifically in the IT governance aspect.
Okay,
Thank you.
great. Welcome, Frank. Frank is nice to see you, Frank. Okay.
Yes.
Um, the next person, please. And when you finish talking, you can just mute. You are not required to put your video on. I mean, you can um just put your video off so that you will not be distracted. But if you want to put it on, that's also perfectly fine. And remember, this is being recorded. So, okay, the next person. Please, let's do it
Please,
quick. We don't have time.
please, I'm Evelyn Abebio. I'm from Ghana, Accra, and I'm entrepreneur.
Great. Entrepreneur. We have entrepreneur and bankers in the house. Okay. Next person. Mention your name and just talk. Yeah.
Uh, Please, I'm Jeffrey Brown. I'm from Ghana and I'm an engineering student.
Oh, engineering student.
Yes, please.
That's nice. From which school or which university?
Please, KNUS.
Oh, which level are you?
Currently 300. I'll be moving to 400 next year.
That's nice. I would like to talk to you after our call.
Yes,
Um
please.
my research is on entrepreneurship and the intersection of entrepreneurship and engineering. So I like dealing with or talking with engineering students about how they envision themselves or how they think they can incorporate entrepreneurial mindset into their work or what their careers. We'll talk about that. Okay,
Yes, please.
next person.
Yeah, I'm Bernard from Ghana. Koforidua to be precise.
Great.
I'm an IT guy, yeah, or IT personnel.
Okay,
Yes.
thanks. So for you on record, Bernard is my or is my should I call it manager or okay. Great. So
I'm a
Bernard,
student. I'm a student.
yeah, both student, manager, fund manager, account manager, everything. Like Bernard is everything. So whatever we are doing, I'm doing it with Bernard and Oliver. But Oliver is not on this call right now. Okay. Who else do we have? Are we finished? I think some people are having network problems, but we won't wait for them. Okay. So I'm Kelvin. You can call me Kelvin. It's fine. And we are learning by courtesy of Kelfa Pips Lab. Okay. So if Kelfa Pips Lab is the organization or the institution that is organizing this smart free forex basic lessons for us. So to start with, today we are going to are you guys seeing my screen? Do you guys see my screen?
Yes, please.
Okay,
Yes.
perfect. Perfect. What do you see? What do you see on the screen?
Like signals.
You see signals? What's the meaning of signals?
I can see some lines with colored pens, red and green.
Okay, so let me do a quick roll call once again. Evelyn, have you been, how long have you been in the Forex market? Are you new? Have you traded before in the Forex market?
No, please. I'm new.
Okay, Jeffrey, what about you?
Please,
You are what?
beginner understanding.
You are what?
I'm new to the space.
You are a beginner.
Yes, please.
What is the meaning of beginner? The question is, have you traded before?
Okay, no, I've not traded before.
Good.
Yes, please.
Frank,
Yes, please.
have you taken any trade on forex pairs or anything before? Have you analyzed market or chart before?
Mm, that was a long time. It's been very long.
Okay. So, but Bernard is more of a beginner. Okay. So, uh, great. So I think all of you are beginners, if I can put it that way. So, let's see how we will be able to approach this. And like I said, we are recording it. So if you miss anything, um, you I'll post the recording and you go back to watch it. Okay. So um, today, what we have on the table today is we're going to look at uh, just give me a second. Today we are going to look at introduction to price action, what price action is. Okay, so what is price action? That's what we're going to do today. And aside that, we would also look at um, so the first thing I wanted to help you all with is um, to help you set up a broker either on Deriv or XNES. And I think I will let Bernard do a screen recording or the steps as to, and then send you it links to Deriv or XNES if you don't have a broker account already. And of course, you are going to start with a demo account, but he will teach you the steps to open a real account from that. And then also, um, and then also, aside talking about price action, we will also look at um, just a second. Okay, good. So we will look at um, a little bit of what liquidity means or what it is, and then what we will focus on more is support and resistance. So I found in my little experience in forex market or forex space that there are three things that are very important to me that I feel like if every beginner or anyone starting gets introduced to and you master it, you can use that as a foundation to go forward. One is market structure or understanding price action. Number two is knowing and understanding liquidity. And then number three is being able to see the levels, either demand supply zones or support resistance zones. And I have refined that to something I called magic support resistance or precision support resistance line. So that's what I'm going to introduce us to today if we get a lot of time. So what is price action?
Please, what's the third one again?
Support resistance.
Thank you.
So what is price action? Price action is simply movement of price on an asset. So how and how do we see this movement? The movement is reviewed by candles. So there are different ways of representing price, but the most common that we use is we have the line, we have candlesticks. So it's the candles. So we can use that. Okay. So what is price action? Movement of price on an asset reviewed by candles. Great. So, and what are the important, what are the three important ways that price move? Okay. three important ways that price moves. One, price moves upwards and moves downwards and also moves sideways. Downwards. So those who will be late, I find it difficult trying to explain, and most of these thoughts are inspirational, and then also accepting new people to the call. So please try always to join early. So let's talk about upward. So when we talk about upward, we mean we can identify an upward price movement by, let's say, price is trending upside. So this movement, we can also talk about this movement as either a trending market or a consolidation market. And there is a very important concept that I learned from ICT about price movement that is called the intra intraday price delivery algorithm. Am I right? Am I right? Yeah. So we have the accumulation phase, the accumulation phase, um, the expansion, and then distribution. Let me let me do a quick job asking Google this real quick to be sure of the terms. So great. So we have yeah, so I think we have the accumulation, manipulation, distribution. Yeah. So sometimes we have four, the terms are four. Sometimes it's like three. So the accumulation phase, the uh okay, no, this is not what I'm looking for. Just give me a little bit of time to remind this. Okay, so from our previous classes, we had talked about um one, two. Okay, so which of you on the call can recall the what I'm talking about? Can like just remind us of the term. So these are like 3 to 4 terms that describes how price moves in a market, like in every session. Has any of you learned it before?
As in what you just said.
Yeah, I mean, if you know, yeah, the price cycle, the cycle that price moves. Okay, so we have it here. So that is accumulation, expansion, a pullback or retracement, and reversal. So these are the four. It could also be accumulation, expansion, or expansion and then distribution. We also have accumulation, manipulation, um, distribution, something like that. So many people use it as three, other people use it as four. But I'm going to show us how that is reviewed in terms of when you are looking at the chart. So this is a typical example of, so let me start by accumulation. So for accumulation, accumulation is when price consolidates, and normally when price is at rest. Okay, so price is inside a particular trading range and shows no desire to go higher or lower. And this is mostly where smart money traders, or when we say smart money, we are referring to the large banks or organizations that have a lot of money, like millions of dollars in positions of volume that they bring to the market. They are the market makers. They control the market. We retailers or $1, $5, $2, $100, $200, $500 capital traders are the retailers. Like, yeah. So uh, when there is accumulation happening or consolidation happening, retailers often would think nothing is happening. They would think, okay, we should get away from the market. And that's the way everybody thinks. When there is accumulation, everybody should go out or get away. If you're trading in, when I was learning, I was taught that when market is accumulating, I should not be interested in anything. I should just be off. But as I keep learning, I have realized that if market is accumulating, that is a good time for you as a student to be studying the market. Because at the same time, market is ranging or accumulating or consolidating, the big players they are positioning themselves so that behind the scenes so that they can make the big move. Either they can manipulate to the upside or downside to take liquidity or stop people out, hand stop losses or stop people out, or fill their orders or hit institutional reference points, and then the market or price will reveal its intention or its true direction that it wants to go. So the first phase is the accumulation. Accumulation. The second phase is that, and this is the accumulation, consolidation. So when you see on the chart in a live market where price is at a particular range where it goes up, comes down, goes up, comes down, and doesn't break to keep moving one-sided, either to the upside or downside for a long time, we call that price action or behavior or movement, accumulation or consolidation. And this an example of it. I will show you on the real chart also. Then the next one is expansion. This is where price moves quickly from a level of consolidation. Price leaves that level quickly. Okay, price leaves that level quickly, and it indicates that smart money are about to reveal their intentions. It often involves liquidity grabs. I've already talked about this, and in this phase, when it does that, it creates fair value gaps, liquidity voids, like gaps in the market, order blocks for future entries or for future references where price will come back to. Okay, so these are a very important step in the movement of price. And then the expansion phase, you can see on this chart, this is the expansion phase. It leaves the blue area and then moves up, okay, to this area, drops back to fill the fair value gap or the space it left in the blue area, and boom, went up again to the original intention that it wanted to go. Then we have retracement or pullbacks. This occurs when price returns to the newly created trading range. For a pullback to be valid, it must have at least three candles closing above each other or below each other. We will get more into this one. But what is the intent? What is the purpose of pullbacks or retracement? Price wouldn't want to keep moving in one direction just for the whole day or for the whole week or the whole month. No. Normally, price will do what we call retracement or pullback. and it is to give a fair valuation of price, either to the premium side or discount side, for buyers and sellers to participate in the trade. So when there is pullbacks, it happens to fill gaps or imbalances or retest order blocks or large orders on unmitigated or unfilled orders, or just to take out, punish late buyers or sellers. Okay, people that are waiting for breakouts to enter, pullbacks will just swallow them in, hit their stop losses, and then move up again. Yeah, so pullbacks are very important. So this is a typical form of retracement. Price drops down, pulls back up, and then keeps dropping down. And then this is reversal. This is like reversal. Price completely moves from the direction it's been going for, let's say, months or weeks or days, and then start moving towards the opposite direction. Around when price is about to give a reversal, the market will slow down. Okay. And there will be a ranging, there will be a range, there will be another consolidation again. And then it will form a new range, and then the cycle of consolidation, expansion, pullback will begin again. Okay. So this is just a quick, this is how a reversal will look like. Good. So think of the market like a journey, like I started saying, movement. Accumulation is when you are boarding the bus. Expansion is when the bus starts moving fast. Retracement is picking up more passengers, come back or stop on the way to pick more passengers. And then reversal is when everybody gets off and the bus goes to a new route. So if you've been driving Uber or Bolt before, when you get an order, you go to pick the passenger, you move, and then you um, drop the passenger, you have to go to a different direction, or go to the direction of new orders that are coming. So in effect, we can say that the market is looking, price is looking for something. So why would price get to a destination and then reverse towards the other destination? It means it's looking for something. That something is looking for is what we call liquidity, which is money. Okay, liquidity is just money, where the money is, where money is. So price moves towards where there is a lot of money. Okay, as you know, this is market. Okay, this is trading. Um, the forex market involves over $7.5 trillion that is being exchanged between retailers, institutional parties, and market participants every day, every single day. This amount of money is being exchanging hands. So you donate $500 or $1, $100. Somebody gets that $1 as profit. You lose, somebody gain. You lose, somebody gain. That is the exchange that is going on. So if you get $1,000 today, you might lose 500 tomorrow, but that is somebody's gain. So that's the concept about the market. So quickly, let's continue with. So now we know that there is accumulation, there is expansion, and there is pullback, and there is pullbacks, and there is reversals. Good. So these are important things that you have to understand. Good. So intraday price delivery. Good. So in an upward trend, what does an upward trend mean? So an upward trend is, for example, let's say this is Euro USD. Okay, so this is Euro USD. So how do I show an upward trend? Okay, so let me first let me first show you an upward trend like this. So an upward trend is when market start from, let's say, down here, goes up, comes down, 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 goes up, okay, comes down, and goes up. Okay, so when the market is moving this way, we can call it an upward trend. Why do we say it's an upward, it's moving up, it's an upward trend? We can say it's an upward trend because you can obviously observe or see that the market is being guided by, if you, let's say, if you draw a line to connect all the lows, the low points. Okay, if you draw a line to connect all the low points, like here, 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 you can see that there are low point. Price goes up, descend, goes up, descend, goes up, descend. But this low point constantly are being represented as lower highs. Oh, sorry. They are shown as being lower highs. Good. So we have lower highs being printed. And then we constantly keep getting higher highs. Okay. Higher highs. For example, this. So higher highs. So when you get a higher high, you get a lower high. High, which takes the previous high out, you get a lower high. This low does not take this previous low out. We get a high, we get a low. Are you guys getting that? So this is an uptrend, okay? But before the market gave us that uptrend, we can observe that around this area, the market ranged. Let's say here, okay? We got a high here, price broke it, but still dropped down into this area. We got a hit here, dropped down until it broke out of this range. So this is now, or this area can be called when the market is moving sideways. Okay, sideways. Okay, and when we get, sorry, and when we get the good, when we get the last lower high taken out, let's say this. So price takes out the last lower high and fails to give us a new high. Sometimes it will fail. Sometimes it can even give us a new high. But let's say this time it fails. It fails to give us a new higher high. Because in an upward trend, we expect market to keep giving us higher highs, lower highs. But why did this move to the downside give us a lower high? Why did it take the lower high out? When that happens, the market is trying to tell us it has an intention to change to a bearish market or a downtrend. So we will see something like this, then we see price drops like this. We can have something like this, and price will do like this and do like this, and then boom, take out this, retest here, and then drop. And then it has changed to a downtrend. Why is this a downtrend? It's a downtrend because we are getting we are getting low, lower low, lower low, and then lower low, lower low, lower high, lower low, lower high, lower low, we'll get a lower high, and it keeps going down. So when the market is moving in an uptrend, we call that a bullish market. And when it is moving in a downtrend, we call that a bearish market. And when it is moving sideways, we call that consolidation or ranging market. So these are the three basic ways that the market will move. More complex ways that the market move is in chart patterns, but we're going to study that in the next class. Good. Any questions up to this time? We have like 5 minutes for this session to close, and we will begin a new session. So if the meeting closes, please stay alert, and I will send a link quickly so that you can join again, okay? So that we can have a little bit of break to refresh our mind. Don't sleep. We'll have another session before we close for today. Any questions? Let's use the 5 minutes to answer questions. Any questions?
Yes, please. I have a question.
Good.
I'm just taking us back a bit. You
Okay.
mentioned for the upward trend, you mentioned we have the lower highs and higher highs, right?
Mm-hmm.
So for the downward trend, you mentioned low, lower low, and others. I didn't get everything.
Lower low.
Yes.
And this is a lower high.
Okay. Thank you.
Lower high. It's a low because it's going down, but it's a high. It's higher than this one.
Yes.
Though it's going down and it's low, it's still higher than this. So that's why we call it that way. Any other questions, guys? Please ask. Because you need to understand this. Okay, you need to understand the basic principles of price action. That price will move, but it has to pull down or come down. Okay, it has to move. If it's in an uptrend, this is likely the way to move. So I've already, Evelyn, do you have any question? Let me mention names. Tolu is here. Eve. Who else? Salim is here. Uchina. Oh, yeah. So we have the senior members in the house. Good. So any question up to this stage? Any question, guys? Okay. So what is the movement, or what type of market is this on the screen right now? What type of market do you see? Is it a bullish market or consolidation market, or the bearish market? Is it an up trend or downtrend or sideways market? What do you see? Look at the chart. Okay. So what I would say is that identify any pairs that you are interested in. For those of you who are new, how did I get this chart? This is trading view. You can get trading view, and this is derive trading view. I'll post the link that I used to open this chart in the WhatsApp so that you can also open it. Good. This is derive, and then we have this is trading view itself. Okay, where you can find all the pairs. I know it's going to be a little difficult